Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are off the day's high. The Nifty falls after approaching the 12,000 mark. Auto stocks are among the top underperformers. Infosys trades with strong gains, but off the day's high. The company put out a statement saying that they have not received any evidence to corroborate the allegations made by the whistleblower. Zee Entertainment is the top loser on the Nifty. VTB Capital will be selling further stake in the company amidst news that the promoters are close to selling further stake in the company. And metal stocks continue to lead the gains in today's trade. JSPL is up over 9% ahead of the Gare Palma 4 block auction. Good afternoon, Neeraj. Well, we're in the green, but I guess there is some profit booking coming around the mark of 12,000.
Yeah, and maybe we could see all of this happen any given day. Navneet, thanks a lot for that. So a bit of profit booking, yes, because we were perched reasonably well midway through trade and then have come off a bit, but still about 1/3% in the green. The banks aren't participating, just about 0.09%. So it's very, very flat for the Nifty bank. And we should get the advanced decline ratio as well, because when we started off, the market breadth was fairly positive. It stayed not as strong as it was at start of the trading day, but still close to or slightly lower than 2:1 in favor of the advances. Very quickly, the heat map for the Nifty. I'll speak about the index first. And Zee, IOC, Hero MotoCorp, Maruti. So autos have taken a bit of a backseat because even Bajaj Auto is down in trade. Tata Motors is down in trade. Reliance is down about 0.5%. That might be weighing in. HDFC Bank marginally lower. What is doing well? Bharti Infra 6% higher. Bajaj Finserv, it was the Bloomberg edge for the morning, and that stock is up about 3%, so doing really well. Infosys, post the clarifications, up about 3%. And Bajaj Finance in the green, ahead of what is arguably the fundraising exercise happening sometime this week, and that stock to about 0.78% higher in trade. But metals it is at the large cap end of the market. Devina, I wonder if it's metals at the broader end of the spectrum as well, which are taking the center stage.
Well, you have a mixed group of stocks which are doing well from the broader market space. Yes, and metals being one of them, specifically JSPL being a key mover, and we'll talk about that in a bit. But aside from that, a lot of stocks which have come up with good set of results have done well. So we'll start off with a few of those names. You've got an Advanced Enzyme which has done well on the back of its numbers. Actually, they've come off from the highs of the day, but Advanced Enzyme was up 5%, it's come to 1.5%. Trident, on the other hand, was up 6.5%, but it's still got decent enough gains on the back of its reported performance for Q2. And Relaxo, a good jump in profits, about 79% jump in profits, and the stock's up about 4.5% this afternoon. Other stocks in focus, like I said, some metal stocks doing well. JSPL for one is up about 8.5% at 133, doing well. JSW Energy too, on the back of the CLSA report and the upgrade coming in. That stock's up about 8%, 76 on JSW Energy. And then you've got the likes of a JK Lakshmi Cement on the back of its results too. The stock's up about to 7%. Remember, going forward, the management commentary suggests that it could be more of a volume driven by a lack of prices. So, sacrifice a bit on prices to gain volumes. That's the commentary coming in from the management. Aside from that, some losers in trade today. You've got the likes of a Dish TV, which was active the last 2 days, but still given up in today's session. VMart, a disappointing quarter, but the management is optimistic about Q3, saying that will be a litmus test for the company. And BEML also on poor set of numbers is down about 4.5%. Other volume buzzers include the likes of Adani Power. Volumes are 6 times the average 20 days volume. Max Finserv and Max India. Both of these stocks are heavily in the green on high volumes of 15 times the last 20 days average. And lastly, stocks at their 52-week highs. Inox Leisure continues to trade in the green. NIIT Tech as well as Cholamandalam trading near their 52-week highs. But also important to track what's happening in the futures and options space. Navneet is highlighting that for us. Navneet, good afternoon.
Good afternoon, Devina, and thanks for that. Well, the range is being maintained. Remember, we've been talking about 11,750 will act as a huge support and 12,000 will be a resistance, and that's exactly how it's played out today. Nifty was approaching towards the mark of 12,000, but there was some profit taking being seen there, and so clearly bears putting up a fight to cross that 12,000 mark. Nifty futures, however, not seeing any sort of build up right now, just up about 3%. In fact, it's the bank Nifty where majority of the action has been seen in the last 2 sessions. Friday also there was a big build up seen seen when it came to the futures, and today as we speak 23% higher on Bank Nifty futures. India VIX, however, has been trading with gains today after cooling off 3% on Friday, so it's once again crossed the mark of 16. In terms of range then, maximum open interest remains on the 12,000 call, and on the put side it is at 11,800. And in today's trade we've seen some fresh writing coming in at 12,000 call, which is added another 10 lakh shares, while the 11,900 adding, that's the put strike about 8 lakh shares. So the range will remain the same, 11,800 to about 12,000. Very quickly on the stock futures, we've been highlighting steel stocks. So Jindal Steel and Power up for the 8th straight session, and in fact the stock's now trading very close to the mark of 200-day moving average, futures indicating fresh longs. Kadila Healthcare, I think the numbers come out next week. There is significant amount of short build-up on the futures side, and that's coupled with, by the way, heavy volumes on the cash side, which may not be a very good sign. So 26% higher, stock down 5.5%, shorting clearly visible, while the volumes on the cash side continue to be high. And Infi, remember the resistance was seen at 700. That's been crossed in today's session after the release from the management. There is unwinding seen at the 700 call, suggesting that the call writers ran for cover after the stock crossed that mark. What's the next level to watch out? The options data has been indicating maximum open interest is at the 800 call and the 750. So first step hurdle will be 750 and then the 800 mark.
Well, let's begin with the Bloomberg exclusive. Ajay Piramal plans to resign as the chairman of Shriram Capital. The promoter of Piramal Group has been the chairman of the Chennai-based financial conglomerate for the last 5 years. PR Sanjay of Bloomberg News is here with the details. Sanjay, why does he want to step down?
Actually, it's a natural fallout because, when Shriram Group and Piramal Enterprises announced their famous tie-up. It was one of the finest news because two different conglomerates coming together to join a largest financial conglomerate in India. But quite clearly it is not working out. So Piramal has started selling Shriram Transport Finance at one point of time. Now he has already started in the process of selling Shriram Capital. So it doesn't make any sense to be as a chairman. We had interviewed both. So Ajay Piramal is saying that he is done with it. So it's only good to step out in the due course. And in the case of Tyagarajan, he was saying that Shriram Capital, chairman, Shriram Group chairman was saying that he would like to, he would have requested Ajay Piramal to be the chairman, even if there is an alliance or not, because there are two finest, business people in India, INC. But Piramal, being Piramal, was humbly said that I have no responsibility over there, so he would like to step down. So the moment Shriram Capital stake being sold by Piramal, it's only natural, and it's like one of the finest amicable settlement which India INC will see.
Right. Sanjay, thanks very much for joining in. So that's the exclusive that we have on Ajay Piramal stepping aside. But moving on, the other stock that's in focus is JSPL. And the stock's been extremely active and an upward trend in the last 8 days or so, with the positive momentum around steels continuing. Nikki will be joining us in just a few moments to talk about this and what's keeping the stock extremely active. Right now also the stock's up about 8%. Aside from that, you've got a JSW Steel also, which is active. It's up about 6.5%. SAIL, for that matter, in Friday's session was up 5%. Today's session yet again another 4.5%. So this pocket suddenly seems to be gathering a lot of attention. That's the metal space. But we were talking about Jindal Steel and Power. Nikki is joining us right now to tell us what's working for the company. Nikki.
Sure. Actually, the trigger point behind this is Gare Palma 4x1 block that's been put on auction apparently, and a lot of the street entirely is factoring in that now JSPL will go ahead and win this bid. That's completely looks like on the face of it this is what it is. Location of the block is Chhattisgarh, and capacity at the peak is around 6 million ton for this complete unit as a whole. Why particularly street is buoyant about this whole block being put on auction is to do with the fact that earlier there was an allocation made to JSPL which was used, the coal was used for its power plant. Later on again the deallocation happened. Post that you saw Vedanta's Balco being qualified for it. Again coal mining said that the bidding price was too low. So there was a lot of back and forth which happened, and back in September 2015 then you had a Supreme Court order which came in and said that the entire process is it's illegal as a whole. So in totality the mine was was deallocated, but then now again it's been put back in auction. And if this happens, then obviously the person, the steel player, in this case JSPL, they are estimating that the cost per ton with this is expected to go down, and the EBITDA per ton effectively would rise. But then again, that's a speculation that around the street that we're working out. We yet need to see what kind of auction price will evolve at this point of time. If the bidding price is around that e-auction realization level of around 2,155 per ton, then there'll be barely any kind of impact or benefit that you'd see percolating down on the financials of any steel company for that matter.
Right, so everything boils down to the bidding price, and we'll get to know what would be that. But thanks a lot, Nikki, for bringing that background for us, why JSPL is in focus. Moving away then, over 56 stocks have been excluded from the futures and options space so far this year. However, there have been no new entrants due to the SEBI order barring NSE from accessing the securities market, be it directly or indirectly, for a period of 6 months. And the ban has ended on October 31st. What does that mean? Can we see more stocks entering into the futures and options market? Maybe yes, and that's what a couple of reports are indicating from Edelweiss as well as Motilal Oswal. So just for a backgrounder, we've not seen any new stocks entering so far this year, and the reason was the ban which was imposed on the exchange for 6 months. So if you look at what Edelweiss Research and Motilal Sales Note has put out, there are 8 stocks which do meet the enhanced eligibility criteria put out by National Stock Exchange for a stock to enter into the F&O market, and these are from the likes of HDFC Life, Avenue Supermarts, and also something like InfoEdge, Bandhan Bank, Indiabulls Venture, Edelweiss Financial, something like Jubilant Life Sciences, and also PNB Housing. And as you can see from this list, a couple of stocks have been outperforming so far this year, and that is HDFC Life. We've also seen consistent returns from Avenue Supermarts. Some other stocks which were highlighted in Edelweiss reports were also from the real estate space, so something like Godrej Properties, Oberoi Realty. We've already seen DLF being in the futures and options market, but there were not many entrants. So let's see if these are likely to be included. And from the asset management space, you could also see the entry of HDFC AMC and Reliance Nippon. And HDFC Life, of course, is a consensus pick which has come in. But besides that, you've also got SBI Life and ICICI Lombard from the insurance space. Remember, the entry will be in a phased manner. This does not mean all the stocks can get included. Yes, if they meet all the eligibility criteria, that's a possibility. But let's see as and when exchange puts out. But remember, this is again subject to SEBI approval in case any stock now enters into the futures and options market.
All right, and all of those stocks that are outperformers, as we know them, in the last 6 months to a year, they've all really done well. So we'll wait and watch as to how this thing pans out. But moving away from that, there are too many fence-sitters in the current market environment. That's the word coming in from Gautam Shah of Goldilocks Premium Research. Earlier today, we caught up with Shah, who said that despite the tax announcements, the market looks to be on a firm footing. Listen in to a slice of that conversation.
I don't think there is much of an excitement because I think there are too many fence sitters in the current market environment, and the pace at which the market has rallied from 11,100 to 11,900 levels, I think has really caught a lot of market participants unaware, because post that tax announcement, you had that sharp 500-point dip, that made things a little hazy. But typically, what we've seen is that the market has really climbed a wall of worry. Apart from the tax announcement, there hasn't really been any supportive news flow in the last many weeks. And despite that, the fact that we are trading at 11,900, it's almost as if the market is telling you that good news is coming. And that's the theme with which we continue to work with for the next many weeks and many months. I think the market is on a very firm footing. Despite the fact that we are trading close to 12,000, the market is not yet overbought on any of the technical studies. And that's predominantly because you had that pause around the 11,600, 700 area a week and a half back. And that pause, helped many of the technical studies cool off. And once that breakout took place beyond 11,700, I think that's really broken the shackles for much greater heights. So I feel that this run should take the Nifty to about 12,300. So that has been our working target for the last many weeks. And therefore, even at 11,900, I feel that the risk reward is very much justified. Also, let me make the point that it's only last week that this rally has actually broadened out. Earlier it was just 10 or 15 Nifty stocks that took the market higher. But now we see that shift happening, the change happening. And this does not look like a false start for the broader markets. We have seen multiple false starts in the last 8 months. People have almost given up on the broader markets. But I think this time it's for real. And if the mid-cap index were to get past 70,000, which I think is going to happen very soon, we should see the mid-cap index rally about 10% and move towards 18,500 to 19,000. So this is still a stock pickers market. Nifty might lose a little bit of a pace, but I think a strong base has been formed around 11,700. And keeping that in mind, every small decline is a buying opportunity for 12,300 near term and 13,000 over the medium term.
Oh, that's it's really encouraging to hear. I mean, we've been so lost in this 11,600, 700 level. And the target has been to push through 12,000. That hearing 13,000 is like music to the ears. But aside from that, if we are seeing the index at 13,000 in the medium term, where is the push going to come from? Obviously, the index has 40-45% weightage of financials. So I'm assuming that it's the large banks that are going to lead the run-up.
I think so, Devina. And what's interesting to note is that the Bank Nifty has actually not yet taken out the post-tax announcement period high. The Nifty is obviously well beyond that. If you remember, the Nifty hit a high of about 11,700, and that's where we faced some resistance. But once the Bank Nifty does that, which I think should happen over the next few days, I'm looking at a near-term target of about 30,800 and then 31,400 to 31,500 on the Bank Nifty. So these are my short-term targets. And what I'm seeing is that many of the underperforming banking stocks are gradually making a comeback. So obviously a stock like Axis Bank, IndusInd Bank, Kotak Bank, which has been sideways for many weeks. I think all of these stocks are having lovely setups. And the top quality names, an HDFC Bank, might just start to underperform. So I think the theme going forward into the next 3 to 6 months is that all those names that did very well in the last 6 to 18 months and where portfolios were hiding into might actually start to underperform. So the point is, top quality might start to underperform, and some of the underperforming names of the last many months might actually start to do well. So banking is right up there, capital goods, auto, and oil and gas with what Reliance has done. I think these are some of my best bets. And I think the dark horse in the current environment could be pharma. I think a 3-year bear market in the pharma space could be completing. And if that is the case, I think a 20% run up on the index over the next 6 months looks very likely. And this is not a space where many people are looking into. So we are a little excited there at Goldilocks.
You mentioned auto, that could be the laggards leading charge. But, we've seen these stocks already run up from their lows 20, 25, even 30% for a Maruti. It has already seen that leg up without any material change. Obviously, fundamentals left aside, but haven't the stocks already run up?
There are two ways to look at it. One way is to see that they have run up 25% from the lows. Another way to look at it is they are still 50% down from the highs. So I think there is a lot of opportunity in the auto stocks, even from current levels. Auto went through a terrible bear market. The index lost about 45%. And let's not forget, auto has been a sort of a leading indicator of the overall market in the last couple of years. So this is the index which actually led the market down. And this is the index which has led the market recovery from that level of 10,600. So from a level of 15,500 on the BSE Auto Index, today we are trading at 19,000. It's a sort of a U-shaped recovery which is taking place, and it is unlikely to end till the index tests the level of 21,000. So I think there is still a lot of money to be made. So names like Maruti, Tata Motors, Bajaj Auto still have lovely setup from a medium-term perspective. You could have small dips from time to time, but I think there are a buying opportunity, and you need to be overweight on auto going into next year.
Right, that was Gautam Shah, medium-term target on the index at 13,000. Well, moving on to a more grave news, obviously with regards to the air pollution in New Delhi. North India and the capital city of Delhi has been reeling under extreme pollution levels. So how are companies like Havells coping with the situation? Let's pose this question to Mr. Rajiv Kinui. He is the Senior VP of the Electrical Consumer Durables Division. Rajiv, thanks very much for taking the time out and joining in. Obviously, this is, Delhi is struggling with one of the worst air pollution crises of the year. Does this indicate that, or have you already started seeing signs of, the air purifier segment really picking up?
Yes. Over the last weekend, post-Diwali, we have really seen a surge of the sales in the air purifier segment, because the AQ has gone really bad in the last 3 to 4 days' time. And we have seen over the weekend the sales have definitely picked up.
This is obviously a matter of grave concern, but to talk about how this segment currently, is this a big segment for you, or is this just on the back of this event that you're anticipating far larger sales to come in?
See, this is currently, we did a test marketing a couple of years back, but this year we have come into this category in a full-fledged way. And like you rightly said, that it's not a good reason, environmental reason, but we are definitely contributing to the society that we are bringing air purifiers so that people breathe in fresh air. And as of now, the industry size is around 200 crores, which is primarily concentrated to the NCR area. But we are seeing a CAGR of 20 to 25% for this industry. And what is happening, we are seeing growth even coming from the peripheral towns also, not only in the NCR town. We are seeing the demand coming from towns like Ludhiana, Meerut, Saharanpur, Jaipur, those towns also. And this category is going, even though the government may bring in some pollution controlling methods, but what is happening, it is dawning upon the customers that even though during post-Diwali, because of the stubble burning, the pollution increases in the northern states, but indoor pollution is also a big hazard. So people, when they see that indoor pollutants are very high, so that is why we have seen the reason coming up in the tier 2 towns also. So considering these facts, we see that this category is definitely going to grow, not only for these for the wrong reasons that are happening in the NCR, but also for the reasons that people, particularly in their families, they want their children and elders to breathe a good and fresh and clean air.
Okay, Rajiv, we wish you all the best. Thank you so much for taking the time out and giving us this quick update. The Senior President of the Electrical Consumer Business of Havells, talking about the upticks that they would have seen. HDFC numbers out. Net profit at 3962 crores. My guess is buoyed by the tax cuts, and otherwise the bottom line numbers will anyways look a lot more attractive for most of these companies. The question is, can the top line numbers look better? We'll get the NI numbers up on the screen in a few minutes, in moments from now. But the bottom line number, just on the face of it, and remembering what Shefali had spoken about, seems to be above estimates. 3962 crores, that's the one number that I have right now. Have you picked up anything else? Okay.
Just to go through the release, I think you're right. The bottom line is boosted by the lower tax that we've seen. So looking at the tax expenses, at least it's 1313 so far in the September quarter gone by, and in the last quarter of this of the last financial year, I think the total tax expenses were about 1216. Let's see. I think the effective tax rate will be key to monitor here, but provisions is something we'll watch out for, and the loan growth. I think the street was expecting a loan growth of about 16%, within which the retail loan growth was key to monitor. We were expecting somewhere about 17%. Remember, the net interest income, we are expecting that to go up by about 21%, which could be in the range of 3,200 crore. We'll get that for you. But right now, the stock's been reacting positively to the numbers that we're seeing on the screen. I think we've got an analyst joining us, Ravikant Anand Bhatt of India Nivesh, who joins us on the phone line. Hi, Ravikant. Thanks a lot for joining. Good afternoon. The stock seems to be reacting positively. The bottom line is above what the street was expecting. Anything which is standing out prima facie that you've looked at the numbers?
No, I think, I just happened to look at the broad numbers. I just heard you say that the loan growth was 16-odd%.
Expectation, I was just highlighting what the street was expecting this time around. What is your expectation, by the way, on the loan growth?
No, so I think we were in the ballpark, and it seems to be decent. If again, as long as it's being driven by the retail loan growth, it should be good, because I think there had been some slowdown as far as the non-retail part was concerned, and the retail share of retail had been going up in case of HDFC Limited. So loan growth is something which I would look forward to as far as the retail is concerned.
Tax is almost halved from last time around. I think 569 crores versus about 1,020 odd crores. But just on the PAT front, expectations, keeping in mind the tax savings, I think it was about 3,265. This is actually a really big beat on the bottom line, 3,962. But also there's that dividend component of 1,074 odd crores, which they've received this time around. So that playing up as well. Now, what happens to the stock? It's already showing you an uptick of about 1% or so. But Ravikant, in terms of your stance on the stock, this is a high quality stock. This has been a market favorite up until now. Do the numbers match the kind of optimism that the stock has been seeing, according to you?
So being a single product company, I think the stock has, the company has done really well. And obviously, over the years, it's the subsidiaries also that have been adding a lot of value to the parent company. So, going forward, one would expect the subsidiaries, especially, if one were to look at HDFC Life also, it's been adding quite a bit of a value. So, one would expect that to continue, as well as HDFC's own business to remain in a steady growth trajectory. It's not going to in the near term, I don't think it's going to gallop very fast. It's going to be in a steady expansion trajectory.
Ravikant, so I have 2-3 numbers now. NII up 12%. Tax expense, I think, is down to 12.5% versus maybe 19.5%, the tax rate, if I'm not wrong. But the NI is up 12% as well. Is this a number that is...
it's still lower than expected.
Yeah, it is low, but 12% seems to be very low.
Yeah, do have the spreads number, because spreads typically tend to move in a very tight band for HDFC. And so for HDFC, I think the number which one very closely tracks is how the spreads move. And spreads tend to move in the range of 2.2 to 2.3% for them. This is one business where the interest cycles do not tend to hurt them very badly. Irrespective of the interest rate cycle, they manage the spreads very well. So I think that's the number you should look at. I think the NII is broadly tracking the balance sheet growth. So while it might be a miss, one should ideally look at the spread number.
No, unfortunately, I don't have the spread number right now. I have some other numbers. The impairment of financial instruments, it's at 754 crores. The profit on sale of investments at about 1627 crores versus 891 crores YOY. And they've got, obviously received their hefty dividend income as well. But net, the NI number, I think somewhere around 12% from what I read from the mail. The net profit about 60-odd%. That's all that we have. In which case, Ravikant, before we thank you, just that a follow-up to that question. Would you believe HDFC, based on what you have right now, a stock good to stay invested in?
Yeah, absolutely. So this is one stock which I think, so they have expanded steadily even outside of the top metros, and I think as far as the growth is concerned, we are going to see some decent and very steady growth in HDFC Limited.
Ravikant, we leave it at that. Thank you so very much for joining in. So HDFC is still a good stock to have in the portfolio. Bottom line beats the street expectations. Net interest income just about in line to marginally lower, I would say. And the various other factors that we've seen, the dividend contribution, dividend amount that's been received. We'll be waiting and watching for what happens to the net interest margins. Ravikant said that it's important to see what spreads also HDFC clocks in. But the stock for now is holding strong. 3 million shares have been traded already on HDFC Bank. It's at 21.57.
Okay, and that's an important stock, by the way, to monitor, with nearly 7% weightage on Nifty. It is a heavy weight and it's reacted positively to the numbers. That'll have some bit of impact on the move that you're seeing on Nifty right now. So 52 points higher 50 points higher with regard to Nifty right now, inching once again very closer to the mark of 11,950, and Nifty Bank is up nearly 80 points, trading around the levels of 30,410. We'll get you more details with regard to what the loan growth was during the quarter, whether did it meet a street expectation of 16%, and what was the retail loan growth so far. I think these were the key metrics, and also the spreads, the margins, how did they pan out right now. So HDFC is still maintaining its gain, which is a positive sign. Just want to highlight few other stocks which are buzzing. So we've already highlighted steel stocks for you when we started. Pull up ICICI Bank. That's sitting with gains of nearly 2% as we speak. So good going for this private bank as well. And Adani Power, I think since the word go in the morning, the stock's been doing well. In fact, it's touched its 52-week high today, and not only just Adani Power, within this group, you've also got Adani Enterprises and Adani Green. All these three stocks today have hit their 52-week high, though Adani Enterprises has come off after hitting those levels, and Adani Green right now sitting with gains of about nearly 3%.
Okay, let's get some conversations going with our guests who are joining in for this capsule, the last 1 hour of trades with the trading wheel, the last 1 hour. Start off with Ajit Mishra of Religare Broking, joins us right now on the show. Ajit, good having you. Thanks for joining in. A word on the index, off the highs of the day, but still holding in the green. Would you create any fresh trading positions on the Nifty or the Nifty Bank?
Yeah, good afternoon, Neeraj. So yes, after that strong start, we are seeing some profit taking at the higher level, which is healthy for the markets. In fact, because 12,000 was a level where we were, anticipating market to see some profit taking. So, but still, I feel that Nifty has potential to inch higher in days to come. So I would prefer waiting for any dip to go long, not the current level. So closer to around, let's say, 11,840, 850 zone. One can definitely consider initiating fresh longs with 11,760 as the stop loss and 12,000, 12,100 is the target area. And the idea behind doing this trade is that we feel that Bank Nifty still have potential to test 30,800 mark. So that is something, pushing us to take this trade. Otherwise, we expect consolidation to happen at least in the near future, and stock-specific move will dictate the market trend.
Okay, that's on the index, but what about individual stocks, Ajit? What are you recommending?
So, Devina, we have seen very strong, consolidation in Biocon, and though we are still seeing a mixed trend in the pharma space, Biocon has outperformed the majority of the players of late. So we still feel that the potential of inching higher from the current levels, cause it's on the verge of consolidation breakout. So 250, that should be the stop loss for any short-term trade, and 280, that should be a target area. And UPL, we are seeing congestion while it's holding above its long-term moving averages on the daily chart. So it's an opportunity for those who have missed this chance earlier, because the move was almost vertical last time. So it's offering an opportunity to go long again. So with the 675 as a stop loss, for 750 as a target, one can definitely initiate fresh longs in UPL as well.
Okay. Hemen Kapadia of KRChoksey is also joining us right now on the show. Hemen, a very good afternoon to you. The index in the last 5 to 6 trading sessions is really bucked up, so to speak. Sensex has been making record highs. Nifty also on its way there. Would you go long now?
Very good afternoon to you, Devina. Thank you for having me. Nope, I wouldn't. I think you can stretch the rubber band only so much and so more. 900 points. It's not yet over, no reversals, but I think this is, we're skating on thin ice. Maybe we go to 12-1, maybe we don't. Either way we do or we don't, we're set and ripe for a correction. Maybe it could be 250 points. If it goes to 12-1, I think it could be 400 points. So, yes, no, I wouldn't buy at all. I have a simple plain vanilla Nifty 11,800 put option for the 28th November series. Just buy it, 120 stop loss 100, target 160. So selectively, yes, but I still feel maybe there's a distribution happening. It doesn't peak out today, but buying fresh, I think there's 150 points to gain and 300 points to lose, Devina.
Okay, that's about the index. What about individual stocks? Are you at least looking at buying stock futures?
No, I think there's Escort, there's Maruti, there's Ashok Leyland, there's Voltas, there's Lever, there is, I think there's a whole bunch of, it's like a la carte of stocks to go short to. So I have a sell call on HUL, 2170, stop loss 2195, 2120. It's come off a bit, so I'd say that is a conditional call. Secondly, a sell on Maruti. Once again, Maruti looks weak at around 74.60, 50 rupee stop loss, 100 rupee target downneath. I think all these stocks are top heavy. Some have seen distribution, some there are crossover sells, there is seen negative divergence. Basically, most of these look unsustainable. Yeah, the financials look good, but most of these don't look sustainable.
Okay, that's some of the stock ideas coming in from Hemen. But, we were talking earlier on the situation in Delhi and the pollution issue out there. Meanwhile, the Supreme Court has come down heavily on the centre and Delhi government for the poor quality of air in the capital. Arpan Chaturvedi, who was at the court proceeding, joins us right now for more details. Arpan, what are you gathering?
That's right. So the hearing is still going on. In the first half of the hearing, Justice Arun Mishra took on the central government, the Delhi government, the Punjab government, the Haryana government, especially on the issue of stubble burning, which has been recognized as one of the main contributors to the worsening air quality in Delhi. Justice Arun Mishra asked us as to why the Supreme Court's directions on stubble burning have not been implemented. He said that today in Delhi, not even in your rooms are people safe with this sort of health emergency.
Arpan, I'll have to cut you here because we need to cut across to Keki Mistry.
On an AUM basis, our total loan book as of 30th of September stood at 4,90,072 crores. The total loan book growth on an AUM basis was 13% during this period. However, the 13% growth was largely lower because of the non-individual loans. In the individual loan category, which is giving money to middle income households, which is typically our business, the growth was as strong as it has been throughout the last several quarters, and we had a 17% growth on an AUM basis for individual loans. During the quarter, we sold loans aggregating to 7,160 crores. Now, as you know, we do not retain all the loans we originate. We also sell down loans. These loans are sold down pursuant to an agreement that we have at HDFC Bank, where HDFC Bank sources housing loans for us. We retain some of those loans, and the remaining loans, which is about 70% of what they source for us, we sell it back to them. So during the quarter, we sold loans aggregating to 7,160 crores. In the last 12 months, we have sold loans aggregating to 23,767 crores. Now, had we not sold these loans, if this 23,767 crores had not been sold, then the growth in the individual loan book would have been 24%, and the growth in the overall loan book would have been 18%. As of 30th of September, we had a total of 62,628 crore worth of loans, which have been sold by us, but where we continue to service these loans. Our focus continued to be on affordable housing. Affordable housing segment continued to do very well. If you look at it in terms of number of new loans that we gave in this period, 36% of the loans that we gave in numbers were to borrowers who are either in the economically weaker section or in the lower income group. In value terms, this was 18%. So 36% in numbers and 18% in value were loans given to borrowers in the economically weaker section or in the lower income group. Every month we approve close to 9,500 crores, a little under 9,500 crores of loans to borrowers in the economically weaker section and in the lower income group. If you look at the average loan size, to borrowers in the economically weaker section, average loan size is 10 lakh and 10,000, that's 10.1 lakh. And to borrowers in the lower income group, our average loan size is 17 lakh and 50,000 rupees. The overall average of loans that we carry now is 27 lakhs. So we've actually seen a reduction in the number of, in the value, in the average loan size of loans given in the first quarter versus the second quarter. In the first quarter, the average loan size that we gave was 27.7 lakhs. In the second quarter, it was 26.6 lakhs, giving a total of 27 lakhs on an average for the 6 months as a whole. So the growth of 17% in the AUM for individual loans has to be seen in the light of the fact that this was on an average loan amount which is lower than what it normally would be, and therefore the volume growth was that much higher. If we look at the breakup of loans outstanding on a balance sheet basis between individual and non-individuals, 76% of the loans outstanding on a balance sheet basis were to individuals, 12% were construction finance, 8% were LRD loans, which is lease rental discounting loans, and 4% were corporate loans. So that's the breakdown on a balance sheet basis. However, if we were to look at this number incrementally, I mentioned to you in the last 4 or 5 press conferences we've had after the quarterly results that we are going slow on our non-individual lending. It's not that we stopped doing non-individual loans, we still are doing it, but we are doing it very, very selectively, very, very slowly. So if you look at the last quarter, the second quarter, 97% of the growth in the loan book was on account of individual loans, and only 3% was on account of non-individual loans. If you look at the 6-month period from April to September, it was 94% in respect of individual loans and 6% in respect of non-individual loans. As you know, for our subsidiaries and associate companies, we do not mark to market these investments based on market prices. We continue to carry these investments at historical cost. The difference between the market value of these investments on 30th September and the price at which these investments are reflected in the balance sheet was 2,28,875 crores of rupees, which means the unrecognized gain on our listed investments is 2,28,875 crores, and that does not take into account unlisted investments like HDFC, Ergo or Credila, where again if you were to mark to market the gain, the amount would be a lot higher. Capital adequacy was a very healthy 19.6%. If we break up that capital adequacy between Tier 1 and Tier 2 capital, Tier 1 capital stood at 18.1% and Tier 2 capital stood at 1.5%. Non-performing loans on an aggregate stood at 1.33% compared to 1.29% in June of this year. So there was a marginal 4 basis points increase in the level of non-performing loans. Provisioning, we have consistently been guiding our investors and the market that we've been extremely, I would say extraordinarily prudent in our provisioning, and we kept providing more and more money every quarter just to take care of any theoretical risk that may arise someday in future. So on 30th of September, we were carrying a total provision of 7,313 crores in a balance sheet. This is against a regulatory requirement of carrying a provision of 3,559 crores.
And that's, of course, the view from Mr. Keki. Mistry, you'll, of course, hear from him on our platform as well a bit later on, maybe tomorrow, once he gives us those interactions. But HDFC stock is doing very well for itself. It's trading nearly at the high point of the day. It helps the index a little bit. Look at that spike on that stock. The bottom line performance. Been saying this. People may argue about how it may not matter too much because it's optical, so on and so forth, but it's there for 3 quarters, and for now maybe the bottom line performance is probably the only factor that might be going in for HDFC right now. The NI growth has been muted. Hemen, a chart check on HDFC. It's a decent up move, which looks like for now it's staying put. Would you trade it on the upside? Conversely, would you book profits here if you were long?
I'd book partial profit because Neeraj, 2195, we have not closed above this level since 28th August. So, and we are bouncing back from 2080. So we are walking into a intermediate swing high which has been tested 2 times. Now on the flip side, if it gets taken out, we'll see a 5-7% jump. But I am not so sanguine on the market itself. So I'd say I'm not suggesting a short, but yeah, profit book, yes.
All right, Z is the other one that's in focus. Some clarification coming out from the management with regards to a specific article that appeared in Business Standard, which talks about promoter shares being moved to escrow accounts, and then the management clarifying, saying that promoter shares are not being moved into escrow accounts. But as you know, as per the story that we've also been following, it's the lenders that have moved their shares into escrow accounts and not the promoters. So not much of a reaction to that clarification. Nonetheless, the stock's down about 3.5% at 300. 28 million shares have been traded. Are you tracking Z, Hemen?
Yes, frankly speaking, it's been on a roller coaster ride, and the amount of weightage that it has on the Nifty Media Index, Devina, is amazing, because the whole Nifty Media Index looks promising and recovering from 1.5 quarter to 2 year decline. But yeah, having said that, a short-term bottom, yes. Medium-term bottom is probably getting into place. So I would be more positive than negative. Not ultra positive, but definitely not negative anymore. I think time being, short to medium term, the worst seems to be getting past us.
Okay, Bharti Infratel is also up about 6.5%. I think Friday session also it had a decent move, trying to curtail those losses that we've seen build up in the stock for some time now. At 215, Ajit Mishra, what will you do with Bharti Infratel?
So, Devina, yes, we are seeing rebound, but just a rebound because the sharp decline, from the level of closer to around 260-65, the stock moved to around 170 levels, and now we are seeing a rebound. So, I feel that this stock may again face a hurdle closer to around 220-225 levels. So, using this rebound, I would suggest, in case if you are stuck, use this rebound to exit those longs and sit on the short side again with 235 as a stop loss.
Okay, that's Bharti Infratel. Remember, after seeing that major correction in the last few trading sessions, the last 2 days at least, it has seen some bit of a recovery right now. Bajaj Finserv is up about 3%, and most of your steel stocks are still maintaining their gains. Ajit, any of these steel makers which have risen in today's session, be it JSPL, JSW Steel or Tata Steel, would you bet on any one of these?
In fact, Navneet, I was been holding longs in almost all three counters. We have booked profit today itself. I feel now that initiating any fresh long at the current levels is going to be difficult because the risk to reward is not favorable. But still, yes, in case if somebody wish to initiate any fresh longs in the metal space, JSW Steel and Tata Steels are better candidates. In case if we see any dip closer to around, let's say, 2 to 3% from the current levels.
Okay, that's about the steel companies. May have slightly come off, but remember, on year-to-date basis, all of them are still down. But in the last 5 to 6 days, we have seen a huge recovery, and the reason for underperformance have been the prices globally too coming off for these players, and iron ore prices moving higher. On that note, let's bring in our next guest on board, Gurmeet Chadha of Complete Circle Consultants, who joins us on the show now. Hi, Gurmeet. Good afternoon, and thanks a lot for joining us once again on this show. Gurmeet, let me start off with the biggie, and you've been stating whenever we've had an interaction, you do like HDFC twins, you do like Bajaj twins. So let me start off with the NBFC players. HDFC just reported its numbers. The street seems to have given thumbs up. Asset quality too has been maintained, I guess, for the quarter gone by. They've said that the spreads were at 2.26. The NIMs have come in at about 3.3%. What have you made of the numbers? Is it still a wise move to keep the stock in the portfolio considering the valuation, and especially how these companies have weathered the storm in the last 1 year of liquidity crisis?
Absolutely. I think a very good set of numbers. I think, and I've been making this point that HDFC Limited in particular hasn't made the up move it should have with the recent rise we have seen in markets. I think what is impressive is I think the NI continues to grow in double digit. The revenues almost grew 20%. Obviously, they were held by capital gain and in the group finance sale and a dividend income of almost 1,070 odd crores. I was seeing their net worth, Navneet, and June 2016, the net worth was 50,000 crores. I've not checked the latest, but if you see this year's balance sheet updated till June, the net worth is now almost 1.3. So that's like 2.5, 3 times jump in net worth. The investment in subsidiaries, I think, will continue to do well. If you just add up, I think HDFC Life, the value of investments would be 65,000 odd crores. AMC would be another 30,000 crores. Bank, almost 1.5. And then there are a host of, NSDL, CDSL, NSC, CAMS. I mean, I can go on. So I think the key here is that unlike others where we apply a holding company discount, and I think even the outlook on subsidiaries seems to be very, very positive, especially for even the players like insurance and AMC. So I think, to my mind, I usually avoid giving price targets, but I think one can expect a good near-term upside as well, which could be 20-30%, depending upon how good the sentiment remains. So extremely positive on HDFC. The standalone loan book also, if you see, including the sell down to HDFC Bank, would again be close to 5 lakh crores. So you're actually getting that 4.5, 5 lakh crore book at minus the value of subsidiaries at 60-70,000 crore market cap. That itself warrants a decent upside. And as I said, the stronger ones will now become even more stronger. The NIMs at 3.3%, stable asset quality tells you that growth with quality would continue to get rewarded. So I remain positive, and I would actually be buying more of HDFC Limited in particular.
Okay, and what about the Bajaj Finance then, Gurmeet? Reports of they launching QIP of about 8,000 crore, which would mean dilution in the range of about 3 to 3.5%. What have you made of those reports? And in case if that comes by, how should one look at this space?
I think the stock has run up quite a bit, and I always view Bajaj Finance as a consumption stock. I never view it as an NBFC stock. Considering their names, considering their 20 odd different credit lines, and you've been writing about it. So wherever there is a spending need, you figure out a way to give credit to it and figure out a way to create an EMI around it. I think the reach, the way they are, catering to tier 3, tier 4 towns, going into some of the rural areas is quite staggering. So I continue to remain positive. I may not want to incrementally add at this price, and we have seen that in the past that you have to consider valuations when you need to make incremental allocations. But I'll continue to remain put. Fundraise obviously will be a positive. I think 8,000 crores is what the market's news is. I think we'll wait for the final news to come in. So continue to hold on to it and maybe use any meaningful dips to maybe add on to some of the positions.
Gurmeet, what's very, very active are the metal names. Now, what JSPL or some of the others do because of individual news flow is one thing, but an entire bucket of stocks has done very well for itself. JSW Steel, Tata Steel, etc. Have they run their course? Because the fundamentals haven't changed, but the stock prices have substantially. Is the risk reward no longer in your favor?
I would agree, Neeraj. I think the risk reward has come up. I won't say they are not in favor. I mean, you could still see maybe some momentum. I was looking at some charts. My view is that the risk-on environment will remain for some time. I was seeing the U.S. private financial sector assets, and I think Ritesh had shared that chart. That's now 5.6 times of the US GDP. So any deflation in asset prices, both commodity and financial assets, would be dealt with very strongly and aggressively by global central banks. So my view is you will have renewed QEs, you will have renewed risk-on sentiment, and that might be supportive of some of these names. So difficult to take a fundamental view. You're right that yes, risk reward probably has come off. So one could be a little tactical. I would prefer to, rather than look at, metals, I would be more tactical on the entire PSU space. I think that's a huge special opportunity space which is there. We have discussed how Hindustan Zinc from a 750 crore stake sale, now the residual stake is valued at 25-30,000 crores. I think the BPCL, the HPCL, Concor, BHEL, and maybe a CPSE ETF to me offers a better opportunity from a risk reward perspective, because you will see accelerated strategic divestment over the next 2 or 3 quarters.
All right, stay on with us, Gurmeet. Lots more to talk to you about, but let's welcome Jonathan Schiessl, fund manager at IIFL Asset Management. He's joining us right now. Jonathan, thanks very much for taking out the time. Wish you a very good afternoon. Let's talk about the recent, change of sentiment, more risk-on appetite coming back into Indian equities. Do you feel that in the current standing with regards to what's happening globally, some macroeconomic data points that are improving globally, the risk-on sentiment will continue for a slightly longer period of time, and therefore one can look at picking up stocks even right now?
Yeah, I guess the key point to note is, up until this stage, up until very recently, foreign investors have not been big participants in this rally to any great extent. And therefore, this more recent sort of surge up that we've seen, we got the corporate tax news, market rallied, then we gave up 50-60% of the gains. Foreigners were selling into that. So the more recent push that we've seen, in the last week or so, seems to very much feels like a more of a global EM type rally, and obviously the moves in the dollar have certainly helped that, and obviously noise coming out from the trade talks has also helped that. So yeah, risk is on with that traditional time of year when it seems to be quite a good time from a historical perspective for markets to push higher. So yeah, I think it's probably less of an India story and more of an emerging market story.
I mean, we've seen, a few data points that have been coming out from China which have been encouraging, but the key question is whether there is enough of stabilization in the economic data that we've been seeing to support the excitement around emerging market equities.
Yeah, look, I mean, emerging markets has been a pretty torrid place for, nearly a decade. And I think the fact is, if you look at most emerging markets, not all, but most, we've been through a quite tough period, and there's been a lot of transformation, and a lot of the, if you like, the excesses that were in the system previously have been worked out. And China is probably one of those economies, which is another one where you could have said there was a huge amount of excess manufacturing capacity. But, the last few years have been very painful for China with the growth slowdown. And I guess to an extent, a lot of the excesses have been worked through the system. Sure, there's still problems. And you can look at other emerging markets and see a similar case. So there is a quite a good case, I think, for emerging markets here. And I guess the last hurdle that was needed to be crossed was global growth beginning to sort of look slightly better than US growth, or if you like, US growth coming down to global growth levels. And I think we've seen that more recently, and therefore the dollar's started to come off. And that's obviously another signal for emerging markets.
Particularly for India, Jonathan, now that we've been, we've got a situation where liquidity is ample and most central governments are indeed trying to make sure that this situation stays like this. Do you feel that for Indian equities, the earnings growth rate, the overall growth of about 6.1%, which the IMF had projected, that's still okay, and it should not deter anybody wanting to make investments into India?
I mean, the fact is, if you're going to be buying in India, you're not going to be buying it on the next 1 or 2 quarters of earnings growth estimates. Unfortunately, for many years, myself included, we've been calling a revival in earnings growth in India, and we've been disappointed for some time. But obviously, what we've got now, what we didn't have before, we've got both government and RBI pulling in the same direction to try and get this economy going. Again, when you start looking at year-on-year comparisons, obviously, because the economy was, starting to weak a year ago, that the data will start to get better. Obviously, from an earnings perspective, we still require a bit more patience. The slowdown has been brutal, and it takes time for it to show back up in the numbers. So, if you're going to be looking to buy India, it's not because of what's going on the ground today. It's more a year or 2 ahead is the story you're looking to sort of position for. And from that perspective, things should be better.
Right. Jonathan, in your opening remarks, you said the FIs have not participated so far, and we've seen at least, some sign of hope returning back to Indian equities was the month of October, where the flows are looking much better compared to the last 5 months that we've seen now. Post-Fed cutting rates once again for the 3rd time, now do you see more of allocation from the FIs coming to the EM basket, and within that, will India be a beneficiary?
Yeah, so I think you're right. So I think any uptick in EM buying will obviously filter down through to India to an extent. I think, though, you have to be cognizant of the fact that there were quite a few investors who were hiding in India for their EM allocations. Obviously they were probably wanted something in EM, didn't want to play China or the other emerging market perceived exporters. And if we do get some sort of trade resolution, you could possibly see some of that money moving out of India back into other emerging markets. But I think overall, when you look at the macro backdrop, India looks quite attractive. The issue in the short term is obviously there's quite a bit priced in. Markets are pushing up to sort of near all-time highs, and yet growth is obviously near a sort of multi-year low.
Yep. Jonathan, if India is attractive at current levels, if somebody wants to put fresh money now, which are your favorite sectors?
Yeah, so it's an interesting, I think like many other indices globally, there's a few stocks that have held up a lot of the mainline indices. And India is no different. There's 4 or 5 stocks which have pulled the index up, kept it flat. You look outside of those big quality, if you like, blue chips, and the market's been pretty miserable for some time. So I think, there are pockets of value out there. We would still advocate a balanced portfolio. So I think, yes, it looks like the dollar's going to weaken off again, and probably that wouldn't be great for Indian exporters like the IT or the healthcare sector. But, we always quite like having a sort of natural rupee hedge in place. So underweight to IT, but still have some exposure there. But obviously our sort of main focus would remain on the domestic side. We're still very much overweight financials, have been for all the way through for some time, and still it's a big overweight of ours. Industrials as well remains a reasonably large overweight as well. And I think there are pockets of value that are still there in perhaps some of the consumer discretionary areas, which have seen real pressure more recently. So there is interesting stuff out and about there. And I would also include some of the mid and small cap names. I think people are looking and want to allocate to that part of the market. I guess the issue in the short term is probably liquidity.
Jonathan, we leave it at that note. Appreciate you joining us today and taking us through your views on Indian markets, which according to him are looking attractive at current levels, though the growth is at a multi-year low. That's Jonathan Schiessl of IIFL. But I just want to pull up Coal India before we move on to the Fab 4 stocks. I think that's seen a sudden spike in the last 10 to 15 minutes of trade. Yes, it's sitting at day's high with gains of about 3.5%. We'll get you a technical check on that. But before that, let's head across to Sharad Dubey to find out the Fab 4 stocks of the day. Hi Sharad, good afternoon.
Good afternoon, Navneet. Two stocks from the power sector have actually made it to the list, but first we'll talk about Relaxo Footwear. The stock is up more than 4% after it delivered a strong set of quarterly numbers. Now the number of volume growth stood at almost 8%, and also a strong product mix did drive the margins by almost 300 basis points. It's coming in at almost 16.84%. Up next is Indiabulls Real Estate, which is in the upper circuit of almost 5% after the company has sold its London property to a promoter-held entity for almost £200 million. And the next stock we see is JSW Energy, which is up almost 6.5%. And this is based on the news that Kotak Securities has actually increased the target price, and raised it to add from reduced to almost 80 rupees. This is based on the news of potential value, additions which can happen in the future. The results did come out, during the market hours, in Friday itself. So that is something which we'll be actually watching out for. And the last stock of the day is CSC, which is up almost 3.5%. After we see a fresh longs, we saw a high open interest of almost 15% with volumes, trading at almost 2 times its 20-day average. So these 4 stocks are buzzing in the space today. Back to you.
Right. Sharad, thanks very much for that. So those are the Fab 4 stocks that you need to keep an eye out on. We're still here with our technical experts and Gurmeet. Gurmeet, I just want to come to you with regards to some of these smaller banks which have been very active over the last few days. I mean, while we've taken a look at commentary from SBI, but Indian Overseas Bank today is up heavily, Central Bank of India, and in the last few days, even a Friday and a Thursday, saw a lot of interest in the smaller names. Central Bank actually come off from its peak, but Indian Bank, IOB, which is up about 10-odd%. What's the sense here? Should one start nibbling into these smaller banks, or just limit yourself to the likes of an SBI and the private sector banks?
I think, Devina, you're right. I think it's probably a time to maybe go a notch up in some of the good run, mid-sized banks or even regional banks. May not be a great idea right now to get into the stress names, which we have been discussing, without naming anyone in particular. But, something like a City Union Bank, something like a Karur Vyasa. We saw Federal Bank report decent set of numbers. So maybe one notch up where where there's a more perception risk than actual risk in the underlying book. We are seeing that and where the caution is more in terms of risk underwriting and being more prudent in terms of incremental lending. Similarly, for some of the HFCs, like let's say a CanFin Home Finance, a very good set of numbers. 30% of the loan base is from Karnataka. We are seeing, Bangalore real estate pick up. The management has guided towards almost a 25% growth in assets for next 2 to 3 years. They already have a client base of 1.5 lakh, which again largely is a large portion of their customers are salaried government employees. So some of the good HFCs, some of the good NBFCs, and maybe some of the regional banks, maybe a notch up, but may not be. I would not still recommend PSU banks and smaller PSU banks. There could be a tactical play here and there, basis various news flows, but definitely a notch up when it comes to both private banks and housing finance.
Okay, that's the smaller banks, and just probably wait it out a bit more, but they're not bad to look at. Small time investments out here. But aside from that, a few other stocks making moves in today's session. We got the likes of a Coal India also, which is up about 3.5%, so not bad going. And we've been talking a whole lot about how these metal companies have been doing. JSW Energy is the other one that's up in the session. Since morning, actually, the stock's been trading up, now up about 5.8%. Remember, you've got a very positive report coming in from CLSA. Also, the management has been talking about how they want to push forth profitable growth. They're looking at doubling capex in the next 2 to 3 years. A quick word on JSW Energy, then Gurmeet.
Devina, avoid for me. I think if without really, so I also be honest, I have not tracked it to that detail the way I do my other long-term fundamental calls. My view on this energy chain is that you're better off by focusing on two players which are on the energy logistics side. Something like an Aegis Logistics, which handles both liquid and gas. The terminaling fees does not come under the regulatory purview. We are a net importer as far as the LNG is concerned. And it's I won't say a monopoly, but largely a play where there are high entry barriers. Your city gas distributors like MGL and Indraprastha. We saw LNG Petronet reporting. So my focus area in this space, which is more on the energy logistics guys and city gas distributors.
Okay, Gurmeet, stay on with us while we also get some technical checks going. Ajit, first a technical check on Coal India, which is sitting at days high at current levels. Do you take any fresh trade?
Yeah, of course, Navneet, we can, in fact, it's witnessed a fresh breakout today. So with stop of around 210, one can wait for 220, 222 as a short-term target. And in fact, in case if it manages to cross the same, then we may see the stock retesting closer to around 230, 35 levels also.
Watch out for this one because the numbers have not come out. Coal India comes out with its quarterly earnings on 11th November. Hemen, some option queries for you. Yes Bank stock options are the most traded on NSE today. I think the key hurdle is 70, where it's facing a big resistance. What are the charts indicating for Yes Bank as it recovers from the opening levels?
They're the big, as usual, 16% OI built up, no need, but it looks like a short, but I'm not sure if it's a short because there's a lot of support at 55. Till we don't break 55, I don't think anything happens. Thing is, we moved up for 5 weeks from the bottom, Navneet. So it's a bit tired, and like you said, I'd say the level is 75, 80 technically. So I would either buy an option at 55, a call option, or if it comes to 80, I'll buy a put. Frankly speaking, it's in a no trade zone, or I wouldn't recommend this. Sell a straddle, but it's too volatile to sell options because if it moves, the move is humongous. So I'm not sure that's the right way to approach it. So either buy in cash with a stop loss of 55, or buy an option when it's 55, or buy a put when it's 80.
Okay, very quickly, the next one is Infosys, which has gone up after giving clarification to the exchange. It has crossed 700. The call has seen unwinding of nearly 8 lakh shares. Has it convincingly remove that mark of 700? Is it poised to move higher from the current levels?
No, I think it's a bit heavy. There was a gap, which was a bearish gap post the results. We've covered half that gap. We haven't covered it completely. I have a feeling we stretched a bit. I would not look at Infosys very favorably currently. I'm not sure if it's a short, but if I were to take digressing a bit, at lower levels, I think TCS is a positional buy call, not Infosys.
Okay, not a short on Infi, but a buy call on TCS at slightly lower levels on a positional basis. Now, a couple of pockets. And Gurmeet, I don't know if you track these companies or no. I also want to talk about the paint companies, but before that, Relaxo Footwear. Strong numbers, some tax benefits coming in as well. But the stock has done okay, 3.5–4% higher in trade after those numbers. Not a cheap stock, doing well. Did you like the results? Would you buy or would you invest in the stock?
Yes, very good set of numbers, and if we recollect, we had discussed Bata and Relaxo in one of our discussion on the consumption themes. And Relaxo probably gains more because of the obviously because of the GST cut, also because of the fact that it impacts the lower end a little more, and also I think there is a large scope in the long run from movement to unorganized to organized space. They've been also ramping up their store interiors quite a bit. There is an increased, focus on new launches aimed at kids, women wear, and across. The school shoe segment, I think I've been speaking to some of the friends who are in this line. There's a lot of focus there as well. So I like it from I would still prefer Bata even in these valuations over Relaxo. Another one which I like, which is unrelated to this in consumption space, is which we actually have discussed multiple times, is also Varun Beverages. I think some of the niche consumption names have really started to look good because, as I said, I can see an organic growth coming, and things bottoming out now and things picking up from here on.
Okay. Let's do a follow-up and then we'll talk about some active stocks. The other one are paint companies, Gurmeet. Any thoughts here? Kansai, Nerolac, Berger, Asian, would you buy any of those? They are just too expensive on an optical PE basis.
So these may not incrementally add them, considering, as you're right, the run-up has happened. But as I said, I'm positive on building material, but paints in particular as a space. I expect some kind of an announcement on or a stimulus on real estate. It could be in form of higher exemption to interest income or maybe higher limits as far as tax saving goes. There could be something which could be done in terms of I don't know, a bad bank is too premature to talk about. There is a lot of focus on affordable housing by the government, and as I said, it's just the decorative paints is just a 40,000 crore industry. I think the industry itself will become 2 to 3x in 3 to 4 years from now. There is a visible conversion happening from lime to decorated paints, especially at the lower end. And obviously, favorite is Asian Paints because not only it has 2/3 market share, also it's fast evolving into a complete home improvement solutions, giving very tough competition to Pidilite on adhesives as well. And again, great free cash flows. So I would prefer to add, but I might want to wait for dips to add a little more in this category.
Okay. We spoke to M. Bharuka of Kansai Nerolac on Friday, and he was confident about double-digit volume growth over a long period of time. Listen into what he had to say.
So last 28 years we have been having a double-digit growth, and I have been saying next 20 years perhaps we will have a double-digit growth in the all segments, whether it is industrial segment or decorative segment. And perhaps this is one of the reasons this has become the most defensive stock, better than FMCG. So I think paint industry would continue to do well. There are only limited players. The penetration level is low. Per capita consumption is low. So I don't see any challenge for next 20 years.
Well, some words of confidence from the paint companies. It's interesting to see how some of these companies believe that what they've done over the last 20 years they can do for the next 20 as well. Good going for now. The other one, and Ajit, I wanted to come in on what JSPL is doing individually. Just gone bonkers right now, up 13-14%, 12.5, 138, 139. How much can it extend itself?
So yes, Neeraj, we have seen almost a vertical surge today itself also, that the stock is up by around 12%, and it has breached its crucial hurdle of 200 EMA on the daily chart as well. Sustainability is the key, so it should hold above 136 to maintain this up move, and in that case 150 to 155 could be the upside target area, but I doubt it's going to happen because it looks slightly overbought at the current level. So one should wait for any closing above this 136 mark to initiate any fresh long positions.
All right, I think Canfin Homes has reported its quarterly numbers. Net interest income is up 19.2% at 155 crores versus 130 crores on a year-on-year basis. And you can see that sharp spike that's come in to the counter. But it's cooled off from the highs as well. But nonetheless, volumes have picked up and the stock's up about 4.5%. But the other stock that actually from the housing finance space that has really done well in the last 3 or 4 trading sessions has been LIC Housing Finance. The stock, I think over the last 4 sessions would be up closer to 12 or 13 odd %. Hemen, LIC Housing Finance, and what would you do with this one?
It looks good, Devina, but 365 to 430 in 7 trading sessions. I'd wait for a small cooler, but yeah, things are looking better. A bounce back nevertheless, but yeah, I think we've seen a short and medium term bottom. We're at 420, Devina. Closer to 405 would be a nice level to get in. It doesn't look bad. It's just that it's moved a bit and we might be just walking into a correction.
Okay, that's LIC Housing. housing finance at 420. Ajit, anything in the last half an hour of trade that you've spotted that looks interesting, maybe from a 2 to 3 day horizon?
Yes, Devina, Dr. Reddy's lab, we've seen a fresh pivot formation on the daily chart. So the risk to reward is favorable. That's why it's attracting my buying interest. So 2750, that should be the stop loss in case if somebody wish to initiate any fresh long position, and close it around, let's say 2950. Should be the target area. So one should be conservative now, considering that we are at closer to the record high. So be very specific when it comes to stock selection, and Dr. Reddy is fitting the bill.
Okay, that's the technical view on Dr. Reddy's Laboratories, which is up about 1.4% in trade. But just 15 minutes to go, it's time to take a look at what the dealing rooms are recommending. And as usual, we've got Yatin Mota and Darshan Mehta joining us with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, so one of the stocks that's been spoken about is RBL Bank today. Some of the private sector banks have actually managed to rebound from the low. Some of the HNIs have been active accumulators. Look at the volumes. Almost 11 million shares have already been traded. Trading flat in today's trade, but nevertheless, there was accumulation that was happening. The other one is Glaxo Pharma. Some of the pharmaceutical MNC companies over the past few days have seen a lot of accumulation by the domestic mutual funds. So companies like GSK Pharma, Abbott, Pfizer, all of them trading at record highs, and some of the domestic funds have been very bullish on these MNC pharma companies. And the last stock that dealers are talking about is Colgate. Dealers indicate there is a buzz of a potential inclusion in the MSCI. Now remember, on the 7th, that is this Thursday night, which will be applicable from Friday morning for us, the MSCI will release its report in terms of the inclusion and exclusion, and this time around they believe Colgate will be one of the inclusion in the global standard index. But Yatin, what are you hearing?
Darshan, Coal India is one stock which is much in focus for the trade today. Remember, steel stocks are doing well, metal as a pack, mining as a pack is doing well. Dealers do indicate Coal India is also one of those stocks which is on the domestic fund radar, and a lot of buying seen at low levels. Decent volumes of over 76 lakh shares traded in the cash market. So Coal India is one stock wherein dealers are bullish on. Strides is also one of those stocks. Of course, now it is not a part of the future and option segment. But still at these levels, HNIs are aggressive buyers, in the cash market. A lot of delivery-based buying seen as far as Strides is concerned. Almost 10 lakh shares traded here. And finally, Motherson Sumi is one stock which is, witnessing some buying based on the short covering which is seen in the counter. 3% up for that one. Nearly 85 lakh shares or traded in the cash segment. So watch out for all of these stocks for trade today as well as tomorrow.
Okay, Yatin as well as Darshan, thanks a lot for joining us with your dealing room check. Gurmeet, a word on pharma stocks. Biocon is buzzing today, and it's gone up on very good volumes on the cash side. The stock's up about 7%. And while you have Biocon moving higher, Cadila is corrected about 5%. They've received a warning letter from US FDA, but clarifying they've given a release to the exchange stating that they will be responding to that order which they have received for their Moraiya plant. But in terms of overall earnings so far which have come out, do you see any sort of value investment here?
So Navneet, very clearly, I think we are rock bottom, almost rock bottom, I would say. In terms of valuations, whether it is generics, whether it is, the other spaces. I think what I like is very selective here. So, you did speak about the branded generics, so that's one space which, despite valuations, you will see more allocation going to, because the regulatory risk, the pricing risk are a lot lower. So the MNC names, the top 4 or 5 formulations account for 40-45% of the turnover, so that makes things even better. I have discussed, I like CRAMS, but I really like Divi's Labs for its superior chemistry skills and the B2B and the its ability to come handy in the late life cycle strategies is unmatched. So good combination of generics and CRAMS there. Diagnostic space is increasingly looking interesting. I think there's a huge unorganized market. And we've seen recent upside in Dr. Lal and some of the others. So that's one space which is also the market will expand. Second, it's still, despite the regional players, it's still a very good margin business as far as the overall thing is concerned. But a better way to play, as I've said earlier, is to pick up a nice pharma fund which has a 10-year kind of a track record. Most AMCs have a specialist pharma fund. Go the STP route. because there are too many moving parts. And the ones with higher weightage in the index, you keep having. There are multiple levers, for the larger players. Like we saw the results of Dr. Reddy, which optically looked good, but when you broke down and saw the impact in North America, the recall of the ranitidine and other antacids, so there are a lot of disruptions here. So better way to play such kind of themes is through a fund route. And also you have to be tactical in this. The exits are as important when you are taking such thematic bets.
All right. I just want to talk to you about two more names, and one of the names was what Darshan highlighted was Colgate. Now, Colgate has moved up in a matter of a month from levels of about 1250, 1260 to 1550, where it's trading at right now. Britannia, on the other hand, has also moved up, from levels of about 2700 to levels of about 3200, where it's trading now in the same period of a month and a half. And last time Britannia was at about 3200 was in the month of January, when it made its entry into the index. Post that, it's been a slide for the stock. What would you do with these two names, Britannia and Colgate?
So starting with Colgate, I think positive on it. I think if you see, we are probably seeing it now consolidating and maybe adding on to its market share on the dental care. While we keep discussing toothpaste and dental care, it also has products on the hair care and personal care side, which are are reasonably popular in different geographies. It has, for a company which is predominantly a dental care company, it has 6 million plus retail outlets. To me, that's a logistical marvel, which is very difficult to replicate. I think Patanjali figured it out after some time, in terms of, after the initial threat it had. So they have, after the acquisition of Sivaka, they have a product like the Sivaka at the entry level, and they have advanced whitening and other products at the higher end. So it's a complete spectrum they cater to. Also, I think the more and more launches on the herbal, natural, and Ayurveda platform adds to your margin. So despite the fact that obviously FMCG stocks, valuation will never give you comfort, but this is one space which I think is a little unique and offers you a more niche play within the overall FMCG play. So very positive on that. Britannia, maybe after the run-up, we saw some concerns on related party transaction. I think the better time was probably to buy then. But biscuits as a space, Parle is clearly the volume leader. Britannia is revenue leader because within the biscuits, it's the cookies and the higher end which stands out for them. I think the key focus area for me, and I would like to wait for a 2 quarter, is the initiatives they've taken in Central India, the Hindi heartland, where they are 1/5 of the Parle volumes. So new launches, distribution tie-ups, and also, the slowdown does impact discretionary consumption a little bit. So my sense is that maybe a buying on dip would be a better strategy for Britannia.
Okay, let's get in closing strategies. Gurmeet, we'll take in one more question with you, but just before that, some closing strategies from our experts. Hemen, if I can come to you first. Your top closing strategy today?
STBT on Glenmark.
STBT on Glenmark. 1% stop loss, 2% target. So square this position tomorrow. A sell today, buy tomorrow on Glenmark. What about you, Ajit?
So Neeraj, I would prefer going short on Bank of Baroda. We have seen a decent rebound in the PSC banking space, and Bank of Baroda has reached closer to its immediate hurdle. So with the stop of around 105, one can wait for 95 as a target.
Okay, we'll watch out for both of these names. One should watch out for companies in the metal space simply because of the kind of move that we've had. So that is point one. Point two is all that's happening to the money managers, the asset management companies. Now, Motilal Oswal may not have a move today, but Motilal Oswal in trade on Thursday and Friday had these big, large moves in today's session, marginally holding up. IIFL Wealth has moved up 20% in the last 15 odd trading sessions, and we all know what Arnam as well as HDFC, AMC have done. So some really smart moves into some of these stocks as well. Gurmeet, is there, from a valuation perspective, a good name available out here? Because I can see various methodologies out there in the open, right? Somebody says that HDFC, AMC, market cap as a percentage of its AUM, 17%. Some of the others are way lower, 1 to 3%. So you never know what metric to believe in. But is there, based on your understanding, a reasonably priced asset manager available to invest in India?
So Neeraj, HDFC AMC from a 6-12 month perspective, the answer is no. I think it's run up, and you pointed out the while that's one metric to look at in terms of the assets as a percentage of the valuation. I think the better metric is that with the change of pricing model, I think the profitability will continue to see a surge. HDFC has the highest aging of assets, and most of its equity funds are 20, 30, 40,000 crores. The liquid fund is 70,000 crores. So what happens is that on older assets, the trail fee and other expenses they incur are far lesser as per the revised grid. And maybe we can sit one-on-one and I can show you the delta it creates. So quarter on quarter, you will see, and if you see the results and if you break it down to level 2, you will see the fee and the commission paid, the number has drastically come off. So when the model changes, they will large AMCs with larger corpuses, larger SIP book and aged assets gain disproportionately. So you will continue to see a 400-500 crore kind of a PAT. I mean, in a business which has such limited capital, I don't see there's any better asset-light model than an AMC business. So, but from a 5-10 year perspective, I think one can continue adding and see if you get meaningful dips. You just have 2 crore unique investors, Neeraj, against 29-30 crore PAN cards and bank accounts. So I think there's a long way to go. The industry, the size is doubling every 2-3 years. So you are talking of an industry which is growing 25-30% CAGR. So it's not right to just compare valuations. One space which I like, which is not asset management space, is general insurance. You only have Lombard as only the standalone private general insurance play, doing very well in motor insurance. Their dealer penetration is 60%, which is unmatched. The second I think comes at 35-38%. The third, MISP guidelines, the third party pool has boosted profitability despite motor, auto going through a rough patch. Health insurance seems to be doing well. They've been prudent in withdrawing from crop insurance despite losing out on significant large premiums. Fire insurance looks very attractive to me. If you see the recent GIC quotes, the reinsurance rates are up 2x in almost 8 or 9 constituencies, which is almost 40% of the market. The retention ratio has improved. Their loss ratio has come down from some 120 to 87%. So this is a long-term play, very low penetration, and the kind of digital initiatives they are taking, it's quite staggering. So I think these are the asset management. If I were to pick something, I would probably pick HDFC AMC still, because their ability to scale up would be higher. ICICI Lombard looks to me a terrific multi-bagger from a long-term perspective.
We'll leave it at that. Gurmeet, thanks much for taking the time out. Ajit and Hemen, just stay on. We'll take in closing thoughts from you post-market close. But here's how the markets are shutting shop. The Nifty bank ending in the red or flattish, let's put it that way. Sensex and the Nifty off the highs of the day, but about 1/3% or 0.4% for the Nifty 50. The mid-cap and the small-cap indices, they've done reasonably okay all through the last few days. In today's session, ending the day flat. Let me first talk about the large caps, though, and what's moved on the index. Bharti Infra 6%, JSW Steel 4.5%, in line with what the other metal games have done. Bajaj Finserv 4%. Coal India about 4%. Infosys, the big mover, the heavyweight, which would be the biggest contributor, I would reckon, in addition to HDFC, which is up about 2% as well, so good going for this one. And ICICI Bank about a couple of percentage points. What's not done well? Z down 4%, IOC about 2.5-3%. But there's weakness in Maruti, weakness in autos by and large. So Maruti, Hero, Tata Motors have all looked weak. And somewhere down there, HUL and Britannia too, looking slightly wobbly. What about the broader end of the spectrum, though, Navneet?
Well, mixed day, Neeraj, as the frontline indices came off their opening highs, so did the broader markets. Let me still start off. There were a lot of gainers which did see some good session today. So JSPL being one of them, the stock rallied about 9 to 10% on back of the news that they did participate in the Gare Palma auction. And let's see, the results of that will be coming out. Max Financial, one of the top F&O gainers, which saw some buying interest, closing with gains of 7%. And from the pharma space, you had Biocon, which went up on good amount of volume on the cash side. Last when I checked, the volumes were nearly doubled. So good going for Biocon. Orissa Mine from the broader markets was locked in upper circuit with gains of 20%. We've been talking about paint companies. So Shalimar Paints, I guess they come out with the numbers next week. Ahead of that, the stock touched its 52-week high today. And right from the word go in the morning, Adani Power has been quite active. That too touched its 52-week high. And something like Heritage Foods and All Cargo Logistics, these stocks also saw some buying interest in today's trading session. So these were your gainers. On the losing side, Kadla Healthcare, a of course, they received a warning letter from US FDA, though they've said that they will be working towards replying to them. V-Mart, on back of numbers, that stock opened down and also closed with cuts of about nearly 5%. Remember, the sales growth numbers were not good, and the battery makers, Amara Raja Battery and Excite, both of them came under selling pressure in the second half of the session.
All right, we've got, I would say, nonetheless, just 3 points, but it's still positive for the index. So probably the 6th or the 7th day of gains. Nifty Bank, though, ends the day marginally in the red with the, I think, Nifty 50 gaining about 54 odd points, 11,943. Sensex also higher by about 154 odd points. Coming to individual contributors on the index, this time around, banks not doing a whole lot much. But you've got Infosys, which is contributing about 21 odd points. HDFC Limited posted its numbers. Street gave it a thumbs up, and the stock is contributing closer to 21 points. ICICI Bank, Bajaj Finserv doing well. Losers include the likes of IndusInd Bank, Kotak Mahindra Bank, and Maruti, which lost at about 6 odd points.
All right, so those are your key contributors. Let's quickly take a look at the market breadth also when it comes to the entire listed universe on National Stock Exchange. So where it was 2:1, I remember at the start of the session, we did see some bit of selling pressure in the second half, some profit booking rather. And finally, the participation today, which has been picking up in the last 6 to 7 days, NSE cash just about 40,000 crore and NSE F&O about 8.1 lakh crore, Davina.
Okay, that's what we've got in terms of the market closing this afternoon, positive. But let's get in a quick closing comment from both our technical experts. Let me begin with you, Ajit, on what one needs to watch out for trade come tomorrow.
So, Devina, as we've discussed in the beginning of the session, that a dip in a bank Nifty would help the index to inch higher. So, one should wait for any dip closer to around 10,000, 11,840, 850 levels for Nifty to go long. Wait in case if you have any long position, it's best to book profit and focus more on the stocks picking side.
Okay, focus on stock picking. Hemen, would that be your assessment too? Stick to stocks, don't think about the index too much?
Yeah, I think so. But if I were to think of the index, I think there's a distribution happening. Next few days, if we don't take out 12.1 or 12, it's going to fall under its own weight. It might not happen in a day or two, but I believe that the distribution top heavy formation happening. We might go to 12.1 before we reverse. We could take a few trading sessions, but I would look to short. Maybe not currently, but yeah, I would be negative on the market, but maybe after a couple of days.
Okay, let's just stick a little bit to the metal space as well and what they've done, because that index has just done so well. Now, Ajit, to you first, if you just look at the Nifty Metal Index and how it has done, would you believe that there is more in store? Would stocks like JSPL, JSW Steel, etc. continue to do more?
Yes, certainly, Neeraj, because it's a multi-year downtrend that we have seen in this space, and now we are seeing a positive divergence on the weekly and monthly charts. So certainly, we feel that the medium-term perspective, definitely the metal has potential to inch higher from the current levels. But as we've said in the beginning, that short-term we may see some profit taking or consolidation in the near future. So be very selective, and JSW Steel, Tata Steel is the best candidate to go long in case if they witness any dip.
Okay, Hemen, one last question. JSPL on the charts, would you be revisiting the stock? Do you think profit booking is a better ploy?
Yeah. 92 to 140 in 5 weeks. Yeah, the medium term trend has turned positive. We are looking at a bounce after 1.5 years of a decline. When the short term, I think it's overdone. So book profits, not a short, but book profits.
Okay, Jaman, we leave it at that. Thanks much for taking the time out and being with us and giving us that perspective. With that, it's a wrap on this edition of Countdown. Up ahead, of course, we will bring you the market wrap and try and get you some more stocks and news as well. Stay tuned.